Hello everyone, welcome to the Ichimoku charts.com daily analysis for the SP 500 for Wednesday, November the 18th. Well, a very small bodied candle today, and that's telling us that neither side has made any progress throughout the day from open to close, or net progress, neither the bulls nor the bears. So for a market that's in a first time frame uptrend, it's not a terribly bullish day and does raise some doubt about the continuation of the market to the upside in the first time frame. Once again, we have a fairly large shadow on the bottom of this candle, and the same as the previous candle, and that is showing us that there was good upside price rejection from around the 1100 whole number area. It was roughly about 1101, 1102, and the buyers came in and decided to buy the market. The buyers haven't been strong enough to take out the high of the candle from 3 periods ago, which is at roughly 113, 112, but were strong enough to maintain the close of the market above the 1106 area, which was the top of a zone of resistance around this 1100 region. The very small body, though, does, as I've said, raise doubt about the potential for continuation of this first time frame uptrend, but we don't have evidence that the uptrend is about to terminate. It certainly hasn't terminated. The market, though, today did make a higher high and a higher low, so we do have a continuation of the first time frame uptrend. The high is just slightly up above the previous high, whereas the previous day's candle, or in bar chart terms, was an inside day, which raised some doubt about the strength of the uptrend. Just looking at the Ichimoku indicators, the market is up above the cloud of the Kumo, which means that it has an overall positive bias, and the market is up above the Tenkan-sen and the Kijun-sen. The Tenkan-sen is pointing up sharply, and that's reflecting the strong upside momentum that the market has had over in the short time frame. And when that happens, it's not abnormal for the market to retrace back towards that area and find support. So that area is at 1086, so there is potential for the market to find support there. There is the previous swing high at 1080 for potential support, and certainly at the Kijun-sen, which is at 1071. And the Kijun-sen has turned flat, and that tends to be an attractor of price action. We can see that the market is basically not trending very efficiently at the moment, and the market is attempting to find equilibrium. So we need to keep an eye on the low of the current candle for a potential retracement back towards the Kijun-sen, and keep an eye on the high of the current candle and the high from 3 days ago. Now, just panning out, we can see that we have resistance around the 1133 area if the market does continue trading up, and there's every likelihood that it may do that. The market is in the second time frame uptrend based on peaks and troughs. We can see we have a series of higher peaks and higher troughs. So we should assume that that trend will continue. Interestingly, with the market being in an uptrend in the first time frame, the types of candles that we're seeing at the moment aren't terribly bearish candles. So you have to wonder about the strength of the bears in this market. If the best that they could produce are these indecisive candles where there's been some buying coming in around the 1106 region, then you have to doubt whether the bears will have the ability to create a new first time frame downtrend for the market to trend down to around these levels near the Kijun-sen or Tenkan-sen. So, as I've said, keep an eye on the low of the current candle, but also the high, and the high around the 1113, 1114 region is very important for the market.